October 16th, 2023. Right now it's 9:17, 13 minutes before the markets open. This morning I came across a rather interesting article about this firm that crossed off Netflix and Nvidia for a list of quality stock. The name of the firm is called Jensen Investment Company. What's interesting about this company is that it's an employee-owned investment management firm. So they have their personal interest and stake. Since you're a partner, you're part of the company that have equity locally. Well, as an ownership, you feel you need to work extra hard, right? That's your company. So that's what's so interesting about this company, that everybody have their own personal financial stake in it. Right? Not just collecting salary and bonus anymore in that sense. Which is kind of like a lot of prop trader or proprietary trader firms set up like that. The traders are actually partners in that sense. Matter of fact, salary of trader is minuscule, is tiny compared to what they can make from the actual profit sharing with the firm, because you're a partner, so you get access to part of the profit. Let's come back to it. Is that what they do is they only invest in companies that have achieved a 15% return on equity every year for at least 10 consecutive years. Okay, so let's look at the formula. Return on equity is basically net income over shares holders equity times 100. So it's expressed in a percentage term in a ratio of net profit over equity, basically. This is net income or net profit. You can say net profit after all expenses over equities. So right away, this is a calculation of how much is making year over year. And this firm, Jensen, only look at companies for the last 10 years. Every year, at least make a 15% return on equity, on his assets, basically. So, if we go down along the list, you can see Apple, I can see Costco, Target, UPS, Lockheed Martin, Nike, BBY, and that. These are fundamental analysis. And if you're looking at 10-year return on equity, ROE is 15%, is more to the point of you I think in direction of Warren Buffett, right? Where we devalue in that sense. And which makes sense, right? If you look at a very long-term holding. You want deep value, so even when it's a temporary dip, you still hold on to it in that sense. So that just, I just want to point out that is a very interesting idea, but also it gives you a backdrop. So it tell me, okay, Apple, people might look at it this way with certain fundamental factors of the reason why they were prolonged holding and adding the portfolio. In that sense, you can do a lot of quick screening to find these type of company, but overall, it gives you additional factor to consider. If the market's running, and these stocks should be really running along with it too. If it doesn't, then there's other fundamental reasons it doesn't. Right? Because if a company is give you 50% ROE year over year for the last 10 years, they must be doing something pretty good, pretty well in that sense. So these are the stock that people would hold in that sense. And fund manager will buy, institutional will buy into them. So the point of this article is basically telling me that if there are these institutions looking at certain factors that are of importance to them, you want to be aware of it. Because these should be the stock that starting to run. When the market is on the upbeat, where everything's lined up, and these will trend much better than stock that have more negative factors in that sense. Right? It all go back to my trading and what I'm looking at. Yeah. Okay, let's go for the morning market. It's a little flat, slightly up in that sense. Right, 5 for bankruptcy, opioid litigation. Yeah, okay, yeah, the opioid. Anyway, pre-market biggest move: Pfizer, Lululemon, Manchester United, Rite Aid. Okay, Pfizer up 8%, Dollar General up 10%. Interesting. Let's continue. NBC to host Israel action going beyond self-defense. Blah, blah, what to make UAE strike. Okay. So we might have, and then we have the analysts call on the video Apple. These guys coming out. So we're gonna have to see and watch how they go. How they're gonna do. Due rise in Middle East tension, Tesla affects banks highlight earning rush. Yeah, so these earnings are coming up, and sometimes if you have a position before earning, you might want to get out first and then recalibrate yourself, especially if there's a lot of uncertainties and you expect a lot of volatilities. Eventually, they all revert back to the mean of the mean being is true valuation value. Right? But short-term spike is inevitable if they sense of something out of this world or the guidance. The important part is the guidance, not just beating earnings. Beating or unable to beat earnings is not as important as the forward-looking guidance, as they tell the investors what they're seeing in the sectors, in their businesses, and what kind of return they expect going forward. So that will be that is the part that's hard to predict, is the guidance. Right? You can project, you can see all the numbers on the box, and you can project potential fundamental numbers or the income or the earnings, liability, expenses, all that. But you cannot. It's hard to expect what they're going to tell you. Right? So that's the factor. That you typically you kind of want to wait if you're not sure of your position. Of course, you have a long-term fundamental opinion of that. Yeah, just hold it. Okay, let's look at this. Google's finally is breaking back up down. I penetrate the breakout line. So that's a fake big breakout in that sense. So I was saying I didn't initiate this trade because other factors, the market, the sector's not behind it. Right? In that sense, if we look at the QQQ, the market is at this point, which basically is a triple top, a down slope triple top in that sense. 1, 2, 3, or you can say 5 times in touch, right? But basically it's triple top overall. So it's a down slope triple top. You need to break this, right, for it to go back into more bullish territory. And the stocks, right, is also a down slope triple top. So only the stock was moving on itself. That's why I held off taking the breakout trade. Had it the other way around, with 2 of 3, I would probably initiate the trade in that sense. Now, which is why I mark it with this retracement. I'm looking for false amount. I'm looking for bias coming. I want to see start push it down, and then I want to see buys it back. At that some of that technical level, like as I'm watching the 21 days moving average, the 50 days moving average, getting really close over here. So I want to see the market, this instrument, retest this level. But if it doesn't, it start taking off, then that's another story. Still, I want to see a false amount. Ideally, I want to see a retest this level. But if the market does not push it down and it starts spiking up but if it starts spiking up without tails, without buyers coming in, without volume, I still might not take this trade yet. Right. So let's look at Heikai Nashi. Heikai Nashi is a different story. I'm seeing a nice trend and then a temporary pause, a doji style, right? Indecision. This. Right. So maybe we might see a few more of these and then it turn green again. That might be a signal. Right. Volume is just really a little mediocre. Nothing's on this, right? But this is Heikai Nashi, which a more smoothing effect in that sense. But it clearly did have a nice trend. I tried to break and then it falls right back in that sense. So active looking, active actively observing and see what they want to do. Right? Meanwhile, Apple is a triple top situation in that sense. Right? You have this triple top, so we'll have to wait and kind of see what they want to do going forward. So that's the weaker one. And then you have Meta. Right, Meta of a double top, it penetrated a little and came right back, but not false hammer. Here's the thing. So the question is, do I enter the trade on this? Again, the market is at that level. It's not going in back into the bullish level yet. On top, this is not a breakthrough in the pullback. It's a breakthrough came right back. So that is a lot of hesitant. Although this could be a false hammer, but that is also, this is on the Heiken Ashi chart. While if I go to Meta on the regular candlestick, it will paint me a different picture. It doesn't give me a false hammer. Now the false hammer here is more weighting than false hammer on the Heiken Ashi. As you can see, the Heiken Ashi is really more for telling you the change of trend and a continuation of trend, while the candlestick is outright the actual construction of price. It does not take a average or smoothing effect, so that's on the candlestick pattern itself. This takes precedence over the Heiken Ashi in that sense. So the candlestick bar on this is not a false hammer, and I want a false hammer here. So that is not a buy yet. Tesla, yeah, triple top, triple bottom is compressing the wedge into a triangle. You see, as I'm drawing out, it's compressing. So I would prefer like a compress, right? And I want to see it going sideways and test up and test down, eventually break and fail and breaks and fail, right? Until the true move comes in, which is the market start moving, taking everything along with it. And if the market start going up and it doesn't, then that means people are taking advantage of the situation of taking over up move, and there's a seller. That's what it tells me. So you have to use a lot of correlation. You have to use a lot of relative strength in that sense. What's the market doing? What's the sector doing? And what is the stock itself moving versus the sector versus the market in that sense. Right. So let's go down the list. This Monday, take a quick look on the technical charts. Yeah, wow, Netflix broke down. Netflix is just dead. Right. So the Jensen investment management is correct. No, they don't buy this, which makes sense, right? Now that kind of like, oh, okay, fundamental wise, people are not buying it. It's broke down. The important point is it broke down below this 200 days moving average. That puts it into an institution bear. So basically, even the market start going up, everything start ripping up, do not buy this stuff. Matter of fact, there's no uptrend. Why are we buying this? Alright, so nothing lined up, stay away on Netflix until otherwise. Right, Microsoft, kind of triple top, right? Coming back low, yeah. Oracle's, yeah, nothing. Nvidia. Didn't experience really a pullback. It's still moving in this nice channel. We can actually put a very nice regression channel on this guy. Now we have sufficient data after the gap to do this. Now we have a nice slightly sideways up, a slight upslope on this channel. Okay, so that's that. I don't see anything of substantiate yet, but on the lookout. This below 200 moving day average, the red line again, stay away for now. Stay away. Do it. Intel, came out of a long job and slowly climbing too. So, but the drop was pretty steep in actuality. So, AMD. AMD actually came back to bounce off the 200 days moving average. So, yeah. Okay. I have a short, long time ago playing reversal play or something that didn't work out, broke out, and short Tony share. Yeah, it's just testing out other strategy, and that strategy was testing out. Okay, so TSM is on the 200 days moving range. That's no buy. IBM get back down, coming up earnings. So we'll have to see. Costco. So let's see Costco. Okay, still under a lot of pressure, gap down and stuff like that. Yeah, so. I have a cash secure put back in September. And, and 49 strikes, October 20th. Okay. Yeah, that one's making money. Just leave it. Yeah, it's a 49 strike too. So why is that trade open? September the 1st, open cash secure put. Yeah, interesting. That's 49 strike too. Interesting. Okay, that's Costco. Oh, I'm sorry, Cisco. I'm like, why do I have a trade with Costco? See, this is the thing. I was thinking, because the article from Jensen Investment, Costco is on this, so I said CSCO. My mind get related the tickers to Costco instead of Cisco. That's why. That's why I'm like, why would I have Costco? I don't think I have Costco. Yeah. Okay, that's fine. Yeah, that's actually 49 strike is down here. So yeah, it's good. It's good. That one's making money, no problem. Clack. There's nothing going on with it. Just sideways, so it's not trending. I'm looking for trend. I'm looking for breakout. I'm looking for retracement and continuation of trend. WDC, okay, it's doing a trend. Also, that's why I have it marked. Although these are the dog, they're on strike. So, but they're still holding. GM is getting whacked. But it's not uptrend, so there's nothing to do with these guys. So, and then let's look at American Express. The banks, nothing much, probably nothing much. Is the market open yet? Okay, market open for 6 minutes already. So, Yoga Hammer, wow. Knee getting open at the low again, so it's going to fight around this level. Even X-Bank is coming off. Okay, yeah. So looks like, yeah, I do have a cash secure put 34, so it's losing money at this point. Yeah. Might have to roll, might have to do something about it, might have to, yeah, but probability wise, it's like a 50% retracement, so probably we just take the loss and at the end of the expiration, let it still expires this month, at the end of this month. So see if it picks itself up a little, or just execute the cash secure put and hold it, and 100 shares is contract I own, which is fine with me. Yeah, I still have a long-term goal on these. Just telling me, okay, I should add a little bit more. The whole point of cash secure put is it does hit my cash secure put on the. I have fundamental long thesis on it. I would just let it get exercised and own the stock instead. So that is on the back burner. So it will come back. If not, or even if I close out the trade, I take the losses and then own how many share I want to. In that sense, right now I'm still thinking it doesn't make much difference. I just own it outright. Yeah, and if it close flat, then it's flat, and I don't own more. So not yet. If it does close under my strike price, then I'll own it. I will buy the stock. I will let the put get exercised in that sense. Moving along, and yeah, these guys have nothing much. That was a long time ago I met this guy. Right now, is there anything? Nah, that's nothing. Take it off. Look at this collapse. Look at this collapse. This is, wow, all the way back right down to 200 days moving average. Wow. 1, 2, 3 for just 4 bar. Went from a peak of 70, more than half in a week. This is why I stick with the big boys, the ones in play, because these just doesn't have as much as institutional support, and when it collapses, everybody is like just rushing out the door in that sense. Yeah. No, thank you. Okay, so let's take a quick look at supposedly the more AI affected stock. Adobe is still up there. Okay, nice, but you have this false hammer, so that's a temporary hold. In that sense, this is under 200 days moving average. Moving on. Under 200 days moving average. Moving on. So a lot of these supposedly directly AI stock is not doing anything as well as the Magnificent 7. That's why I prefer to play those guys. Right? This one's over, so that's still an uptrend. We can mark this. I might have some play, but look at these volatility. So, but just nice to mark as a sector leader. In that sense, no, none of these. Basically, I'm gonna tell you, I don't recall what ANET is, so I have to look back into the fundamentals actually to remind me before I will initiate trade. But I'm just marking it technical wise. This guy and Adobe are the only two that are worthy for AI play right now. Let's continue down. Even if this guy C3 AI is way below, so yeah. Yeah, most of them are just dogs. They're just down. Okay, this is another one, but it's very thinly traded. You see how that's not much candlestick information. So it's just on the list, so I'm aware of them. Okay, this one could be interesting. Sprinkling. I have no idea what they are, but was that to the AI list? So yeah, so we'll mark it. When AI start really ripping up, these guys might just take off too. So start marking, start tracking. No, under 200 days moving average. Just skip it. Yeah, just skip it. See these guys, just a dog, just sideways like this. There's no way to play until we start really trending up again. And this guy came off a long, steep decline. Yeah, look. Anything under $10, I typically don't really want to touch them. Yeah, because most mutual fund mandate that stock they are very lowly priced, they stay away from. They get much more. Those stocks are much more easily manipulated. In a sense, as being is one big buy can move the stock, so one big holder can move the stock in that sense. And so yeah, there's a travel line. nothing much there. I don't expect much going on. Those guy. LMT. LMT was on Jensen's. Let's see what it's that looking like. Oh, okay. Man, it's under 200-day moving average. So even if it's a 10-year ROE, it's a defense stock, and it's a different play. Defense stocks typically they're war machines, right? They make war machines. These guys. So unless, well, right now we have Ukraine, we have Middle East situation. So that we're seeing this jump, this gap, and staying buoyant, right? But it's still below the 200 days moving average. So that's outside the bull play that I prefer. BBY. Why Best Buy, it's definitely below 200 moving days average. Nike is below 200. So these guys, and then these are high yield stocks, and high yield funds over here. So Lululemon, So again, after I takes a quick look over my watch list. Back to the border market. Market is around 0.8%, up a little today. Not much going on right now. Dollar yen is flat, going sideways. Energy. So not much yet, not much this morning, but it give me the background, the overview of what I'm looking for this week. Basically, I'm going to have option expiration. I might end up owning some more stock on the Lee play, on Cisco. Probably going to pocket the premium on that play. And Google is on the top of my watch list right now as to what you want to do. I'm looking for false hammer formation to initiate trade in that sense. But even if the problem is the market is not behind it. Right? So that's a harder trade in actuality. So take a smaller position even if I open that trade. Maybe Meta, maybe I might have that trade too. So actively looking for confirmation of bias coming in, and expect some volatility in the market going forward, because just world geopolitical situation, where the Middle East situation, so that can become a bigger thing itself, and hopefully not. Okay, that's about it for this morning. So we lay down this week tone, the overview, and I will continue to see if there's triggers and setup to open trades. It's mid of the month, and we'll see. Going towards the option expiration, the Friday of the month also. Going to be interesting. Okay, that's about it for today. Thanks for watching, and I will see everybody on the next video. Remember, prosperity happens never by accident. Plans